And you'd obviously be looking at that from the point of view of maybe not seeing the perfect level to trade against, but there was a couple of small liquidity grabs that you could have perhaps taken advantage of. As the price starts to sell off, of course, coming into the close, then we can see that the next day we can see that there is a very, very aggressive drop-off at the cash open. So none of this sell at 29 was difficult to spot. It's a $1,000 move. Based on the fact that it is a $1,000 move, you'd have been aware that 09 might well have been a location for profit taking from yesterday. So this is something we can start recognizing. The bottom edge was just as obvious in the afternoon session. If you're looking at the pricing of volatilities, we actually called that one yesterday. Into the bottom edge, you'll see the same thing happening in terms of the short-term value. Now you can't, because I'll have to zoom in a little bit more than this so you can actually recognize the divergence into the lows here. But you can see exactly the same thing at the low price. The price of volatility at these low prices is actually getting cheaper on that macro scale basis. It's very easy to spot. I know it's subtle, but all you have to do, guys, is join the dots. All you have to do is join the dots and see if there is any value in it. When you start recognizing that there's value here, you start recognizing that there's opportunities to buy into this as a possible narrative here for the long side of the book. This is you just using one piece of evidence, the price of volatility. But the reason why we like volatility, the reason why we like these trades is because it's a real-time internal without it being effectively an internal. It's somebody that's making a forecast about the future. It's not somebody that's perhaps trading the present, because VIX is obviously the pricing of the volatility, right? The pricing of volatility is a forecast of the future. It's not necessarily a reflection always of the present. If it was a reflection of the present, then of course the price would probably always be exactly the same as an inverse correlation, right? So we can obviously look at this pricing of the future and recognize the probability that the price is going to go up on the S&P over the short period. And the price obviously goes up on the S&P over the short period very nicely. You can see that even into the high price here, you can already recognize that the volatility's made a new higher high. The price itself is actually still significantly divergent, telling you that this is still very bullish. Still very bullish, and we should expect to see higher high prices, and sure enough, we get higher high prices, as if by some sort of magic we've actually bottom ticked the marketplace. Well, we didn't just bottom tick the marketplace, we actually top ticked the sell as well into this last phase up here. We topped tick the sell. So we bottom ticked the buy, we top ticked the sell, and the price then started to sell off beautifully. And as we got into the evening session, there was a little bit of value, not much, but a little bit of value as we started to come back off of these areas through to the closing bell. Into the closing bell, we can start to understand why the bottom got put in, didn't we? If we look at the bottom edge here, one of the things you'll be able to recognize is that the volatility hasn't actually gone down since this kind of low phase was put in here. So we can look at that phase and say, well, you know, from that price onwards, the volatility is actually starting to diverge. It's not getting any more expensive. Well, if it's not getting any more expensive, I don't think it's going to go down very much further. So this is already starting to give us an idea that because we sold at 45.29s, that 45.09s is probably going to be $1,000. Well, it is not probably $1,000. It is $1,000. And as a result, there's going to be a lot of profit taking, including ourselves on a macro scale basis, using the $1,000 profit take area just here. And that's exactly what we started to see. We started to see that buy side bounce. Now, as far as valuations are concerned, there hasn't been any current change to the valuation, but we only get maybe 2 or 3 of these changes in a day, if we're lucky, 2 or 3 changes in a day. Because they really are macro type swing narratives. They don't just put the price of volatility up and then put it back down again and put it back up again and put it back down again. They don't do that process. They take a view. They're forecasting, remember, the future, and their view of the future doesn't change every 2 seconds. What else? Well, let's take a look at what Warren made of the open. The thing you've got to remember is that at the cash open, remember guys, that not all these products trade. They might be high volume products, but they don't all trade. It's the same as stocks. The price isn't going to print accurately until the first print comes out. So you've got to make sure that whilst this might look like it's gapping up, it doesn't necessarily mean it is gapping up. doesn't necessarily mean that that's the case. And that's what you've got to remember when you're looking at these things on a very small short-term chart, especially when you're looking at things like any other equities. As the price drops back down again, you can see that there wasn't really an awful lot of business in here. It's not bullish and it's not bearish, is it? It kind of doesn't gap down as much as the market does. It doesn't gap down as much as the market does, but it does gap down, doesn't it? It starts to gap down, and we start to recognize the little change. Into the bottom edge, you can see that we started to see that little bull coming back into place off the bottom edge at exactly the same time as we saw the volatility guys coming in for that buy trade there. And obviously, as we started to move up into the highs, Warren's had a change of heart and now sees the market as slightly more bearish tint. Now, obviously, in line with that, we'd like to see the volatility guys agreeing with them, otherwise there's no trade for us. But certainly the volatility guys at the moment, not necessarily agreeing with Warren's position on this. As a result, no trade. As a result, there's no trade. So we're just waiting for this to evolve, aren't we? We're waiting for this to evolve. I'd like to see a sell coming in, but I want to see the volatility guys agreeing with that sell. And at the moment, as we drill down into the lower term charts, we can start to recognize that in the lower term charts, this does not look like a trade that's going to start selling off. As a result, we can see, well, we just see the price is just squeezed through the top edges regardless, so that's okay. That's pretty good. There's nothing we have to, there's nothing much we have to do with this at the moment except just keep letting it go higher. It's been a good trade so far today. I think when the overall view of the market looks into the market shape here, we can see that Warren, not really that keen with it, but overall you can see the shape developing. Let's try and get some context to this whole move. To get context, we have to look at the hourlies. The reason why we look at the hourlies is because we're trying to figure out what the big picture looks like. And we can see on the hourlies, this is not a good looking picture. You can see volatilities are getting very expensive again. We've seen this before several times, haven't we? In the past, we recognized that change in behavior over here. Remember that big call for that sell-off we got? So over here, we started to see Warren was starting to rotate. It hadn't just started to rotate, it had been rotating for several days. The volatility guys start to now sell. They start to price up their volatility and the equity markets hit new highs. This is the sell of the century right here, isn't it? That's the sell trade opportunity on an end of day business, a closing price that you need to be short on. There's no questions. No questions at all. And obviously that resulted in a very significant sell-off from 44.80s down to 43.70s, 110 points, 110 S&P points, guys, in just a few days. Massive, massive profits. As the price drops down here, of course, we start to understand this logic. We start to understand this on a macro and a micro scale basis. Well, as we go forward, we can see that Warren gets bullish. We can see the volatility guys are kind of confirming behind that at the moment. But look at what's happened in the last 3 days. We can see that Warren was going bearish, the volatility guys were going bearish. So obviously as traders, we know that there's a macro sell in here. And sure enough, into yesterday's sell-off market, we got this brilliant bit of business, made a lot of money on yesterday's sell-off. And obviously into today's markets, we can see that this market is definitely bearish. No question about it. But it's not bearish at bottom edges, is it? It's not bearish at bottom edges. Why? Because Warren's unwound some of the position this morning. Warren's managed to unwind some of the position. So when we understand that, we know that this is going to be an automatic sell at higher prints. It's got to be. But obviously it's up to us to now go in to find that trade, isn't it, on a 1 minute chart or lower. And if it's a sell at higher prices, we need to see it. We need to actually recognize and see the sell at higher prices so that we can annihilate the buyers. And we will do it. We'll obviously take the buyers absolutely off the numbers big style today because there's a lot of value in this. But it's obviously going to be a value only at higher prices and only when the short-term volatility becomes expensive again. So you can start looking for that short-term volatility become expensive. I did just sell some equities against that 17.5 there, and it's just dropped down to 16 quarters. I am taking a bit of money off the trade. 4 ticks. That'll do me. That'll do me. Thank you very much. It's a nice little quick trade. And it is early because you can see that there is no value in the short term at the moment for this to work into that short bit of business. But you can see it's trying hard to probably try and run some sweeps up here. So it'd be lovely to run some of those sweeps against the weak buyers at higher prices and absolutely destroy them into the wrong trade at the wrong price at this stage. That's what we'd love to do right here. Capture those guys buying into that horrible little shape. Sorry guys, it's just made another little break lower, so I'm going to take some more profits at 16s. And stops in place. So you can see how easy it is, guys. It really is that easy, isn't it? The buy off the bottom edge was perfect. The sell all day yesterday was perfect. The run up into the top edge was perfect. And I've been selling off the top edge at the moment. This big up candle, of course, started to give us a little bit of separation. This price area here gave us a level to lean against in terms of a location. So we can already recognize that this is a good area to start thinking about selling. And then, of course, all we have to do now is find the trade to lean against, find the opportunity, find the book change. And you can see we've had a very, very strong sell-off. Remember I said we were going to destroy the buyers? What did we just do to those buyers at the top edge? We just absolutely destroyed them, didn't we? That's what happens when you buy a breakout candle like that, guys. That's what retail traders buy, don't they? They all pour into these types of breakout candles and they all think they're doing great until they suddenly find themselves under water by quite a sizable sum of money. So that was a good bit of business, guys. Well done, if anybody was on board. You can see the shape of this trade has been second to none. The sell at the top edge has been brilliant. The buy at the bottom edge is pretty much a gamble, but it's $1,000, so why not? And you can see that this sell at the 50 pullback is very, very strong. And how do we know it's a 50 pullback? Well, it just went from 9 to 19s. Of course, it's the 50 pullback on a $1,000 trade, right? So if we go from the bottom of the bracket to the top of the bracket, you'll see that this is the 50 pullback right there. Who didn't know that? Who wasn't doing the work to understand the structures? And then you can see that we've had this enormous sell-off already, haven't we? It's crazy how easy it is when you think about it. When you take a step back, just a step, you don't have to do too much extra work, do you? You just have to think the logic. Think the logic through about where the trade is, why this was a buy at 9s from the 29 sell. Oh, it's $1,000. Great, there's a possible buy then, isn't there? Everybody that makes $1,000 in these trades will want to take some profits at $1,000, everybody. And you can always recognize these types of opportunities when they set up like this. It's crazy good, guys, crazy good. Anyway, looking in the background, you can see also that we had the day swing low here into that $1,000 move. You see that there was a day swing low just into that phase, but that's kind of a little bit irrelevant. The speed that we came down into that phase, you're not going to stop. You're going to stop that price, that's for sure. And obviously a puncture through the bottom edges for the sweep. Remember, you've got to make sure you keep getting back in and out of your charts. You can see how much value was in this blue line for that sell to carry. So you really needed to make sure you had some short-term value in that trade, plus a reason to buy it. If you didn't have that short-term value and a reason to buy it, there's no way you would have stood in front at 45.09s. This price was going south out at 45 evens, right? So judging by where this value is at the present moment, I wouldn't be surprised that if it doesn't improve today, I wouldn't be surprised if we're not trading back below 45 handle by the end of today through this process. That would not be a surprise at all to man nor beast. Make sense? Crystal clear? Very obvious?